Well, first it was iron ore hitting record levels, but overnight the copper price has jumped to its highest level in 10 years, above $10,000 a tonne. Joining us live now is our business editor, Ross Greenwood, to explain all this. Ross, it strikes me that 10 years ago, when commodities were booming, the Australian dollar topped out at what, $1.10 US?
Yeah.
Not this time.
It's not even 80 cents, is it, at the moment?
No.
So something's different now. I mean, you know, when you've got iron ore prices close to $200 a tonne, record prices, billions of dollars coming into our national economy, when you've got Dr. Copper sitting out there, at a, you know, sort of Dr. Copper sitting out there, basically the best part of $10,000 a tonne, it means the mining industry is booming. Now, there's a few subtle differences. One is that you're not getting the massive amount of mining development going on, and so that created labour shortages, but also clearly was a significant boost to Australia's economy. Second thing that you've not got at the moment right now is the Reserve Bank printing money. So the Reserve Bank is deliberately printing, well, $200 billion at the moment, effectively printing, buying back bonds, stimulating the economy as a result of the recession and the pandemic. So what's occurring is the Reserve Bank is deliberately trying to keep the Australian dollar down. For now, it's been successful. But the more these commodity prices simply pump up Australia's economy, and we know with the budget coming up that the government is going to keep on spending hundreds of billions of dollars coming in over the next few years because of iron ore. I mean, that is the absolute key to whether they can continue to keep this Australian dollar down or not. Chances are, if it keeps going like this, they'll probably struggle to keep the dollar well below 80 US cents.
So with China our biggest customer for iron ore, is that the same for copper as well?
Yeah, it is. I mean, but it's a global demand for copper now. And of course, you know, copper wiring, copper in engines, copper everywhere you go. So that's one of the keys. In short supply, we're a major producer. And so again, this is one of the real sort of, if you like, icons of industrial production is copper. You watch the copper price. So it's not just Australia, it's all over the world right now.
What did you make of Josh Frydenberg's pitch yesterday, is his budget approach to spend when we're in so much debt?
Well, you see, the interesting part about that is that you might have expected, like, say, Canada, maybe somewhere there's a tap of the brakes. But Josh Frydenberg is taking no chances going into the next election. He recognises while the borders are closed, it's all about domestic jobs. So the more money that he can throw at the economy to create more of those jobs, the more demand he can actually build. Because remember, as I've said many times, half of the government's money comes from PAYE taxpayers. The more people that are out of work, the less money the government gets, the more money it has to pay for social services. That's the reason why he's pitching so aggressively there. And also why the Reserve Bank, of course, is coming in lockstep. And suggestions are when next week they make an interest rate decision, at some point they might even say they'll expand the $200 billion in bond buying to put even more money into our economy.
So he wants, the expectation now is that he wants the unemployment rate to get into the 4%.
Yes.
But the RBA governor had said the month prior that it should be in the 3s.
Well, yes, so that's where you've got it. So, but if you do that, imagine what the price of labour is going to be like in Australia. This is the reason why there is enormous pressure to open up the borders internationally.
Can inflation take off then?
Because inflation takes off, wages take off. If wages take off, prices take off, inflation takes off. That's a genie I'm not certain that the Reserve Bank really wants to let out of the bottle. They're saying they will right now.
Well, can you overheat the economy then?
You sure can. And if you overheat the economy, what happens? Interest rates go up. If interest rates go up, this whole thing can fall in on itself. That's a danger. But it's not happening now, and it's not happening for the foreseeable future.
It sounds like it's got potential. Like it's a calculated risk worth taking.
Well, that's the calculated risk they're taking right now.
Good one. Ross Greenwood, always good to chat.
Quite okay.